Good afternoon and welcome to our weekly livestock market update. I'm Brownfield News Anchor reporter Meghan Grebner. With us again this week, University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Meghan.
All right, we talked last week and we did kind of a pre-report estimate and talked a little bit about that cattle on feed. The report came out last Friday. Let's talk a little bit about what we saw and any major surprises or anything that we need to take away from that report.
Yeah, so it's actually nice. I think we got a little bit of good news out of cattle on feed report last week. If you looked at placements pre-report, the guesses range from 103.8% of a year ago to 109.9%. And we actually came in at 103. So lower placements than anticipated pre-report, I think, has been part of the reason why we've seen a little strength in cattle markets so far this week. And so it's nice to see a little bit of good news. I will say we still are building cattle supply, so we have to remember, up 3% is still what we got in terms of, but maybe a little bit of slowing coming. I think we're still fairly current when we look at where we are on the feedlot side, and hopefully that means that we'll keep weights, slaughter weights down or at year-ago levels for the remainder of this year, keeping beef supplies maybe in a little better check. The other thing we got out of the report is a little bit of news on percentage of heifers in the feed yard as well. We are up 4.8% relative to a year ago. You have to remember a year ago was pretty low, but perhaps we're starting to see some signs that some of the heifer retention that was going on in 2015 and early 2016 maybe is slowing down. And although I don't think we've certainly stopped the growth in cow numbers in this country, perhaps the extreme growth that we've seen is slowing. So again, overall some good news out of cattle on feed, and hopefully we'll continue to build on that.
We talked about the weights issues and lower weights. How does that relate, and how does that help profitability for cattle producers?
Yeah, so I think the bottom line is when we're putting more beef, pork, and chicken on the marketplace in 2016, there's two ways to do it. One is the sheer number of animals that we're going to slaughter, and the other is how much weight we put on those animals. So although we're going to run more cattle through the feed yard this year, keeping weights down a little bit means overall beef supplies don't grow as much, and I think that's the very positive. I will say when you look at we've gone for a time, I remember years ago when folks said, I don't know that carcass fits in a box anymore, and I think we've just made the box bigger all the time to make sure that it fits. So I'm not saying that we're going away from that completely, but it is nice to be below a year ago for the first time in a while. So I think it means less beef supplies and maybe a little higher prices for producers.
Let's talk a little bit about the markets this week. What have we been seeing and what's going on as it relates to livestock?
Yeah, so I will say, I think that the tune has been the same one we've been on for a long time, and that is more supplies of beef and pork coming to the marketplace. Have more prices, and boy, you look at the pork side here for a minute, and I remind folks we're down 16 days in a row in hog prices. It's been a long time since we've had that kind of run. So far this week, down another couple dollars, 100. When you look at futures markets, they've certainly been tough on hog futures this week, suggesting that perhaps we're getting some weakness, mainly maybe from the trade side. We got some weekly export data. China suggests some of the lowest levels that we've seen since the very start of this year, and I think part of the run-up that we saw into early June was a lot associated with expectations about more pork going to China. So that weekly data hasn't been very helpful on the pork side. Now you start looking at the products on pork, and I go, pork bellies, have just been in a free fall, if you will, as we talked, down about $40 over the last 3 days. Very difficult to find any fundamentals, I think, that completely makes it understandable why we've seen such a decline. But bellies by itself, that's taken $3 to $4 off of hog prices just with those lower belly prices. So pork cutout down, and a lot of the products also down on the pork side. I guess as we look at cattle, cattle prices a little higher this week. Again, I think we've gotten a little bit of help from what we've saw out of cattle on feed. Feeder steers 1 to 3 higher as we've gone through the week, and also a little bit of strength on the fed cattle side as well. And I think we've seen some strength on futures for both fed and especially fed cattle as we've gone through this week. So maybe not quite as jury and news on the cattle side as on the hog side. I will say though, when you look at choice beef prices, we may average below $2 a pound for the first time this year. So wholesale side, we're still seeing some weakness coming there as well.
I want to go back to pork for just a second. We talk about 16 days in a row that we've seen a decline in the pork market. Is the one saving grace, and I say this with all respect to all the livestock sector or the ag industry, is that we're seeing a moderation in corn prices again, and we're seeing commodity prices back off a little bit?
Yeah, so I think it's the one thing that as you look at line, we have seen corn prices come down. It's made the bottom line look a little better than it otherwise would have. However, I think we've seen a little bit of plateauing in terms of some of the price line on the corn side the last few days. Yet hog futures have really tumbled, and so it makes that bottom line not look so good as you go through the remainder of 2016. And I think we got a crop pretty close to being in the bin, so I don't expect a lot of increase in corn prices. But perhaps we're finding a bottom, and yet we have to work through some pretty big runs of hogs as we get in. So all these things tell me there's still some downside risk in terms of bottom lines to hog producers.
So heading into Q4 of 2016 and Q1 of 2017, do producers really need to buckle down at this point and manage and mitigate risk where they can?
I think they really need to be paying attention to the opportunity to mitigate risk. I say all the time, risk mitigation is my hindsight is 20/20. I could have told you exactly what you should have done, and I think all always look at, hey, tell me where the top is if we're talking about hog prices, or tell me where the bottom is if we're talking about corn prices, and they don't think about it as much as risk mitigation as trying to hit the high if it's hog price or low if it's corn prices. That mentality of, can I lock in a reasonable return, and if I can, should I then do it on some portion of my expected production, I think is much more important in these periods of tight margins that I think we have coming ahead.
Do we see poultry numbers come out this week, Scott?
We don't see, no, not too much on the poultry side. Again, I think though the story there is frankly pretty similar as when we look at 2016. We're up a little over 2% in terms of chicken production, and we've pretty much been there year to date, start of the year. So you look across the board, and we got more supplies of all three, and I think that continues to pressure. I see more about relative prices of beef, pork, and chicken, and we all the time wonder about the degree of substitutability between those meats. It's certainly not zero. I will say with a larger share of that meat purchased away from home, menu switches, but we could in fact see some switches going on from some of the higher priced products to lower valued products.
You brought up choice beef prices. What indication does that give us? Any indication of maybe where we're headed in the beef sector?
Well, perhaps. I think we're in the late summer part of this, where we know that moving some of those grilling products have been a little tougher of late. We talked about the Choice Select spread just a few weeks ago being at all-time highs, and now we're back to where a Choice Select spread's less than $10 a hundred. So getting back to more historical Choice Select spread tells me that some of those higher valued products have lost relative to the lower valued products here the last few weeks, and so I do think there's some stories to be told there. I continue to say just more meat supplies means on prices as we move forward.
Anything that we need to look out for next week, Scott, report-wise? Maybe a little insight into the first part of of August. I can't believe we're in August already.
I know, already 7 months through, it seems like. Well, I don't think there's many new reports out. We get ag prices late next week, which will give us a little bit of information on prices received for different products. But Restaurant Performance Index comes out next week. One that's maybe not so directly important to hog producers, but land values are next week. Very curious to see what we're saying about what's happened to ag land values here over the last year and get USDA's look at that. I think those are the important things that we see as we move through next week.
To subscribe to our weekly livestock update, visit our website, brownfieldagnews.com. I'm Meghan Grebner on Brownfield.